Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Thursday, July 17th, 2025. So, another good day for the Bulls. New all-time high close. And to me, I think this was really sparked by the small caps, and I'll show you why in a second. So, it was kind of just a dull open. We really didn't do much. We had a little bit of a dip here, and that's right around, say, we were here, say 10. Yeah, we climbed up, so right around 9:30. But if we take a look at the small caps, this is at that same time, right around. Hang on one second. Let me take a look here. Yeah, 9:35. We had this move right here, and that's kind of what triggered the S&P to start going up, and they just had little pullbacks and just grinded higher. Now, there's a couple ways to look at this. One is we're trading within this big range where we hit the top of it. That's pretty much where we went. We came down, so an option could be. Let me go to the 15-minute chart. It's a little bit easier. So that's the top of the range, and here's the bottom of the range. So I'm not sure if this is it, or they're about to break out and coil. But right now, you could see it starts here. We came up, hit it down, came up. So if it's going to follow this range and continue to just coil, then we would expect a move to come somewhere down into the 6200. Now, tomorrow is its options expiration. It's one of the largest ones we've had. I'm not sure if it's in history, but I know it's up there. So we need to expect volatility. Now, if we break out, this is where really all the calls and the puts are in between this range, the 6200 and the 63. So a normal kind of guideline would be that they close it right at 6250. And, so if we came up and down, but if we break out of it to the upside, the delta gamma is going to be, it's going to be on the bullish side, and that can accelerate things to the upside. If it comes down, I don't believe it would break it to the downside. So really, the odds would be breaking it to the upside, or like I said, they just come down tomorrow, close it right at the 6250, and everybody in between loses. But I'm not great with all that gamma and the delta neutral, delta bullish. That's not really my cup of tea. I just know that there's a lot of contracts out there that expire tomorrow, so we need to expect volatility. So again, we're either in this range right here, or we're going to break out, or we're going to kind of pull back and meet somewhere right in the middle for tomorrow. We have small bearish divergences, but honestly, they're not even really worth looking at right now. We could pay attention to them because, eventually they're going to mean something. But this carry trade that's on there is huge right now, and it's this is what's driving markets, and why we're seeing every dip bid back up again. So we have some small bearish divergences. Again, that would lead me to say that we're going to close somewhere at the 6250. That's a 50-point drop. So that's more than what we did. So I'm not sure, it will get all the way down there. Obviously, the first support is going to be right here. You can see it's price support as well as the 50-day moving average on the 15-minute chart. If they break through that, then we again, I would expect them to just park it and kind of just bounce back and forth. On the 60-minute chart, even with these new highs, there's the momentum here. It just has a massive divergence. So again, I'm not really it's one of those things that you look at, and you could stay with I don't trust it, but right now I'm sticking with the small caps, because you have the S&P even up 33, was up a little over a half a point. IWM was up $1.31%, and was higher than that. We pulled back towards the close. So this is why I've been sticking with the small caps. Now, there's a very similar type pattern that's on the S&P, but like I said, I showed you the range on the S&P, but this looks like a classic cup and handle. So here's your big dip, here's it back up, and now we're going back and forth. They could, if we come back down, this could be the handle they're making, and when it breaks out, this is a pretty big one, because we're talking about from 217 up to 224. So you would add 7 points onto the breakout, and that would bring us all the way up into the the 2231 area, which is above here, so we'd be breaking new rally highs. And if we look at the hourly chart, hang on, let me remove some of this stuff here. Hide, clean this chart up. Okay, so if we made it up to the 231, you could right around here that you can see this is the resistance area that's here. It'd be pretty close to that. And again, remember that the big inverted head and shoulders pattern is looking for a move to come up and test these highs. So this is why I've been, really sticking with the small caps, because it's given us the biggest bang for the buck. And not only that, when you're trading the options on 0 day, I mean, what I typically been doing is when I see the S&P up near resistance, I'll do a credit spread, and I'll be going long the IWM and with calls, because it's doubling and tripling on a daily basis. And that's been since I kind of went market neutral on the S&P after we made that, this jump right here. Obviously, it was way too early. But again, I wasn't saying to short the market. I was just saying switch over to the small caps. And from there, they've been just outperforming everything. So I'm sticking with that. Now, another thing I've been watching, or I've been telling people in the room, I've been telling people in the newsletter, are the quantum stocks. And RGTY up another 3.5%. That was after being up 30% yesterday. RGTIW, the warrant, was up 8%. That was after being up 40%. And then we have our last one, QBTS, up 13%. So we're crushing what the bulls that are just trading the S&P, but we're going to ride it. When we get the dips, we know that IWM is going to probably fall harder than the S&P, but I also, when they find their footing, it moves up a lot faster, and that's really why I've been sticking with it. So if we are going to break out of this, say next week or something, you can see these trend lines that we have. One's going from the March 26 highs, that we just bring it up across here, and you can see that top is at 6,400. This one going from this high to this high is coming in right around the 6,350. So these would be some upside targets that we watch. And again, if we're trading within this range, then we could look for a move coming back down to the 6,200. And again, that it's really that same pattern that I was showing you with the small caps, where this could be a big cup and handle pattern, and we just make that handle between the 60 to say 290, somewhere in this range here, and it just bounces around. But being we have options expiration tomorrow, I don't believe it's going to do it. I think we either are going to break out or we're going to come down into the middle. So let's see the way they open it tomorrow. I will warn you, expect volatility. It's going to be probably pretty big. You can see moves just reverse instantly, and it's just really the market makers that are either moving their position to sell because they're delta negative or positive. And, I don't read that stuff, but I know it does produce some pretty wild swings. So let's see what plays out tomorrow. Have a great night, and I'll talk to you guys.